All right, welcome back. We've got here moving averages. Moving averages are something that I don't really use too much. Occasionally, I drop it on my chart, generally when I'm trying to switch things up a little bit. To me, they've not been majorly beneficial because I do love, love, love to focus on price. If you're the same, feel free to skip this video. The reason I've included this is because I found a way to use moving averages for myself, and I also know that a lot of people find them very valuable. I got a few people in my community and other people as well, friends and people that I chat to, that do use moving averages and do find them very useful. So I'm going to make this video because you may be one of those people. You may find this very valuable. You may also be the kind of person like me who, yep, you've tried them out, but they're not really your thing. You'd rather just focus on the candles. So what is a moving average? Well, basically, a moving average shows the rolling average price of the market over a specified time period. Now, the moving average I use, and the one that you're going to want to use for this video, or if you're trying to use the same one as me, is the 9 EMA. Okay, so length 9, offset 0, source close, resolution same as chart, and it's an EMA, which is an exponential moving average. So you have simple moving averages and exponential moving averages. This one is the exponential. It just moves a bit smoother with price and a bit more precise as well. So, what is it used for? What does it do? Well, as mentioned, it gives you the rolling average price of the market. So, as you can see, essentially, when the market's going up, it rolls just under the price. When the market's going down, it rolls just above the price. And then when the market's going sideways, it essentially runs through the middle, kind of like a support and resistance through the consolidation. Now, what I will use a moving average for is actually as a form of support and resistance and just a kind of additional confluence when I'm looking to buy or sell a market. Now, what I'm going to show you is just a few examples. I mean, we can go anywhere because it works the same all the time. The 9 EMA is very tight attached to price. Let me just show you. If we were to use, for example, the 90, I think it would completely move away from price. So the higher the number, the more smoothed out it is. People use it for trend direction. For me, it doesn't really work like that. I like to have the very tight one as it's more of an entry signal or an entry confluence for me than anything else. So yeah, right. Looking then 4 hour chart we're on now, you can see watching the moving average that it acts as support and it acts as resistance. So if we look at this move down, okay, this is a really nice move down. At the start, it's below price, and that's on this upside move. All right, so if you were looking to buy through this level for whatever reason, this would have acted as a support 1, 2, and 3 times for some profitable movements. Okay. Now, when the market pushes through it, it actually goes above price, and that generally shows us that we're now in a down move. All right. And as you see, we come back up, we retest it, and if you'd have sold any of these retests here, you would have been in for a great profitable movement to the downside. Okay. Same kind of thing again. If you just sold that retest, the price would have never got that high again before falling further. Sold this retest here, price falls, trades through the middle a little bit choppy there. But as you can see, generally when we come down, retest the moving average, it then goes lower. Okay, and the same on the way back up. You see how the moving average flips and starts going up. Then when we get these retests, we get buying opportunities presented to us. Okay, so the moving average is generally like a flowing support and resistance. You can see again here, push down, retest, sell. Okay. However, it is not 100% accurate. And the reason that I do like it and I have used it and I do use it from time to time, but the reason that I prefer to keep my charts naked and just focus on the candles and the price is because it can be a bit of a distraction. And that is the biggest thing for me that actually puts me off using it on my day-to-day trading. It can be very useful as a confluence if you can moderate it. But personally, when I stick an indicator on the chart, I start looking at it. And it draws me away from what price is actually doing. And obviously, my strategy without a moving average works fine. So I generally tend to not use it. I will stick it on sometimes, as mentioned, if I'm just switching it up a little bit, because it can be useful and it looks nice. Yeah, but that's not a reason to use it. Okay, so if we look here, we've got support, push up, support, push up, and then it pushes over the top, and then we push down. We have resistance, pushes through there. Yeah, resistance, and so on. So you see that it does work as a flowing resistance and support for price. Now, with the 9, it will pretty much work on any time frame, hourly, 4 hourly, daily. It gets a little bit tight. 10-minute. See how nice it is there on this move up, and how nice it is there on the move down. All right. how nice it is here on the move up. So the low time frames work very nice with this 9 EMA as well. Now, one thing to mention, the big thing to mention, and the most important thing when it comes to talking about moving averages, you cannot get distracted by it. You shouldn't buy because price retests the moving average, right? You need to have other confluences. Now, here is a good example. This would have been an actual good level to use the moving average at. So we got this supply zone. As we see, price broke through it, retested it, formed bullish confirmation. Now, we also see that bullish confirmation lined up with an EMA retest, okay? So this point here would be a good buy. And that would be where, the EMA has essentially brought more confluence in for you. But if you look, it also works without the EMA, right? We have a supply zone, broken, retested, bullish engulfing, and we can buy. Now, if you like the additional confluence and you like the additional confirmation, I've just lost that example now, then it's great, okay? It can be very useful. But if you can trade without it comfortably and you don't think you need it in your trading, well, then just keep it that way, all right? If we stick the EMA on again, I think we might have another example here. Yeah, cool. So we have higher high, higher low, higher high, higher low, higher high here, where we've taken out this higher previous higher high. Little supply zone area, push up, retest, bullish candle, which also retests the moving average, and then bam, price flies. Okay, so if you like it as an additional confluence, you can use it. However, the thing that I'm trying to point across, the information I'm trying to push to you is only use it as an additional confluence, and make sure that if you're using it, you don't get distracted by it and start using it as a sole trading indicator. Okay. So make sure you're using your supply and demand, make sure you're using your key levels, and this should only be there as an additional bit of confidence, okay, to add more confidence to your trade, because you see, all right, the moving average is also lining up with everything that I already thought about the market, okay? But you need to make sure that everything lines up nicely. Now, here's a good example of why you need to make sure everything lines up nicely. If you get distracted and you start focusing on just the moving average, when we see the prices above the moving average, then it's generally retesting as resistance. And when price is below the moving average, it's generally retesting as support. Well, if you forget everything else and you start just focusing on the moving average, I mean, here's a great example. It's just straight away. So we see a bearish move. That might, if you're not focusing on everything else around it, you might think, okay, this is bearish. So then you sell the retest of the moving average, right? So you sell that retest, thinking the market's going to go lower. You're probably going to be looking at a stop there also, over the previous supply zone. Well, it doesn't do that, does it? It's not going to go down. I mean, in this one, you may have got lucky. But then the other example is as well here, where we see, okay, the moving average is crossed. So now I'm going to be looking at a retest to buy. So you do that, and you're going to get burned, all right? So that is why you need to make sure you're focusing on everything else as well as the moving average and using it just as an additional layer of confluence. So the way I would look to use it is, say everything lines up. You found a move, everything lines up, and then you see, oh, the moving average also respects that and also, suggests that could be the right thing to do. Well, then that might be a nice place to buy it. So say we've got here supply zone, push lower, retest of that supply zone, and then the market begins pushing down. You can see after this closure, we get a retest of this. You may think, okay, then maybe this is a good place to buy. Or maybe you want to bring it short. You've seen this move happen. You've seen the structure give way. You see then this bearish candle form after retesting it. You may think, all right, this is a cool place to sell to continue this trend lower. All right. So personally, I don't use it much. I will be honest about that. I am not going to pretend that I use this all the time. But this is the moving average that I found works for me, the 9 EMA, and it does work, as you've seen in these examples, as a good level of support and resistance for price that continually flows. So if you're finding good trades and you need that additional layer of confluence, yeah, this was a great example. And you want that additional layer of confluence just to add to your confidence and just to help your psychology while the trade plays out, then definitely go and stick these on your charts. And they will help with that, okay? For me personally, I'm actually happier without the distraction, and that is why I've taken them off my charts. But if you are someone who prefers the confluence, because I know a lot of members of my community enjoy the confluence, and also a lot of other traders that I know enjoy that additional confluence of having the moving averages there on the chart, then do not feel bad about putting it on, okay? That, to be honest, is the only indicator that I'm going to say is okay to use. Anything else, oscillators, Bollinger Bands, all that nonsense, yeah, not good, or at least not for me anyway. I prefer the naked charts. I prefer to focus on the price and not on what some indicators are trying to tell me. But the moving average, of course, as it is generally just showing you a flowing average of the price, is not a harmful indicator as long as you know how to moderate it and you know how to use it and you don't start focusing solely on that. So cool, that's it for this video. Hopefully you enjoyed the Fibonacci video as well. That one to me is a much more usable day-to-day piece of, a tool. Moving averages are great as well, depending on your style of trading, depending on if you enjoy that kind of thing, you need the extra confluence, or you prefer to just have the candle action. So in the next video, we are going to talk about some new perspectives. So just a few new ways to actually look at the market to make sure that you have a fresh perspective all the time, and to make sure you know exactly what you're looking for. And if you're having a hard time, you're stuck in a little bit of a rut, you can actually look at this in a new perspective, look at the market in a new perspective, and get a new outlook on it, and hopefully a new layer of clarity. So that's what we're going to talk about now. And then we are going to recap over this chapter, over the Advancing Your Forex chapter, looking at now liquidity, moving averages, and Fibonacci, and actually look at formulating a perfect trade using everything we showed you in the processes section, and now everything that I've showed you here as well. So very exciting. We are coming close to the end of the technicals now, and we will have some live trading sessions as well at the end that you can go and view, some backtest sessions using all the principles. I'll probably do a few hours of that. And so without further ado, let's move over into that. Thank you for watching. I hope you've enjoyed, and I'll see you in the new perspectives video.